Hi, this is Steve Hayes with Real Living, First Choice Real Estate Services here in Loveland, Colorado. I'm here with Wes Porter with Cobalt Mortgage, and we're going to run through some of the basics of getting applied for a home loan. Wes, why don't you tell us a little bit about who you're with?
My name is Wes Porter, as Steve mentioned. I'm with Cobalt Mortgage here in Loveland, Colorado. We're actually officed out of the Centera location.
Great. So as a home buyer, they come to you to get pre-approved for a loan. What documents are they going to need to have available to apply?
So for a full application, all borrowers are required to bring the same set of documentation. We typically are going to be looking at the last 2 years of tax returns. It's going to include all pages, statements, schedules, including any 1099s or W-2s that are used to file those taxes.
Super.
And along with those tax returns, the next step is going to be pay stubs, typically for the last 30 days, all pages of checking and savings account statements to basically state your assets, and then of course from there we do pull a full credit report.
Okay, super. Well, once that full credit report is pulled, the buyer will get something called a good faith estimate. Can you explain to us what that good faith estimate, or GFE, is?
A good faith estimate is basically a summary, it's a projection at the beginning of the loan of what you are going to be charged for services and fees throughout the process. What you're actually going to be charged is going to be itemized out on a HUD-1 settlement statement when you close.
Great. So what does having that GFE, the good faith estimate, mean to the borrower?
What this means to the borrower, it basically, through itemization, is able to it's going to break down every fee that's being charged to you so you understand what services you're being basically charged for. Whether that be an appraisal, title service, lender origination, all those fees are going to be shown to you. So basically you can protect yourself from being overcharged.
And if there's a difference in what's given at the beginning and when they get to the closing, what happens?
So typically you're going to have your good faith estimate that's disclosed at the beginning of the process. We have a 10% basically allowance for anything that's, I guess, quoted high or low. Anytime that a borrower is charged more than 10% of what's disclosed on the good faith, we actually, as a lender, have to credit that to you, and we take on full responsibility for the cost.
Super. So that's good protection for the borrower to show up to the closing table getting what they thought they were going to get.
Absolutely.
Great. Well, this is the first in a series of videos that Wes and I will be doing, walking borrowers through the whole buying process from application through closing. Hope you can join us for future episodes. And if you need to get in touch with Wes for a loan, how do they do that?
Best way to reach me is going to be on my cell, 720-838-1446.
Great. And I'm Steve Hayes with Real Living, First Choice Real Estate Services, and you can reach me at 970-690-0541. Have a great day.